Hello and welcome to Conkers Corner. Today I'm at Mello 2018 and I have the privilege of speaking with Mike Brenner. Mike is an executive at Expedia and also a part-time investor and a thorough forensic researcher. So Mike, you just introduce yourself for me a little bit and tell us a little bit about your journey from child to now.
Yes, so I'm currently married with a wife and two young children and fairly demanding jobs. So my sort of investing is definitely fitting around those things. But I guess it's something I've been interested in for quite a long while, but it's only flourished in the last sort of probably 5-6 years. So historically, sort of background-wise, I think I've led a very privileged childhood and a very loving family, and that gave me a huge amount of confidence. I guess private school education was an expensive way of giving me a huge injection of that. But what it's meant is that I've generally had a slightly, how can I put it, slightly non-normal career where I've gone through various different startups. I've had a lot of success and then a lot of failure with companies going bankrupt. But ultimately, through all of that, I've had a huge amount of learning. And I think that's why I've ended up where I am in the position I am, in the company I am, because there's a lot of skill sets which have been built up there. And I think in terms of investing, it's always, I guess, been in the background, but really not having the confidence to go and risk my own money. But funnily enough, with the businesses that I've worked in, I've essentially been investing anyway, working out which partners to work with, which companies to connect into solutions to solve problems. And so I guess the main difference is it's now my money on the line rather than somebody else's.
Exactly. So tell me about the skill sets that you've got and have had in the careers, including the one you've got now at Expedia.
So back in when I first left university, the job I had was at a company called Thomson Financial, which is now Thomson Reuters, and they had a business which was fundamentally transitioning from print and books into electronic and data. And I was very fortunate at the time to be around there when that change was happening. It was around payments, but also risk and moving from paper to electronic. September 11th was actually a very good thing for me career-wise, because suddenly risk and understanding who you didn't want to do business with and showing your compliance became a very important thing. And so you needed real-time data and software solutions to make sure you didn't go to jail. So I had a very good time with that, but it was my first understanding of when there's a transformative change, how do you then, take that to market and help people through that journey? So, I think that then made me realise, that technology, that business change is something I really liked. And then so I was lucky enough to make a bit of money there, take a number of years off. And then when I came back, I worked with a company called Geneva Partners, which was essentially a technology brokerage. And what they really looked at is what are the problems that our core segment has, which at that time is retail financial services, and how do we help them, understand what their priority problems are, and how can we look at solving it? And so fundamentally, Geneva was about having those conversations, typically with the big sort of 8-10 retail banks at the time in the UK. And one of the problems was how do we identify people when they're not face-to-face, so that we can try and improve people's ability to apply for products. And then we realised they also had a problem, sort of around real-time credit and also around e-signature. So how do we move them into paperless? And so we arranged a number of different, sort of views for the banks to understand who's out there in the marketplace and who would be the people who could help solve that problem. Actually, a lot of the technology we found was over in the US. And so the problems that we were able to solve for them was, how do you grow your business outside the US and not risk a load of capital? Solve two problems, come up with a great solution, and you're then able to have a very engaged buyer wanting to work with you to do that. So that's helped me to build a real understand what the problem is mindset, and I think that's been taken throughout the rest of my career because it's fun trying to work out what the real problem is and then what are the ways that I can help with that. So if you look at my job today at Expedia, that's fundamentally what I do for businesses outside of Expedia. And trying to work out what the real problem is, not the problem they think they're telling you, is probably the biggest skill set I have. Okay,
so with that skill set, have you then transferred that into your investing? Are you looking for companies that provide a solution?
Yeah, I mean, I think I like to try and understand, for example, with someone like Zoo Digital, today I've been able to work out what I believe the real problem is that they're solving, which is, how do I make sure that the very, very talented translators around the world can spend the least amount of time providing a quality product and earn the most per minute that they're offering?
Yes.
And so fundamentally, as a marketplace product, that for me is the problem that they're solving, which happens to then benefit content creators. And so by focusing their development on how do we make sure that, you know, these translators, these dubbers can provide the best service and basically make the most of their time, that marketplace is going to win. So it was good to have that validated by the CFO, but it goes back to the skills I've learned, and you know, that then maybe helps me understand why they're doing better than someone else who's just doing dubbing or translation. Okay,
so what was the first stock that you ever invested in, and why?
So it was B-Sky B back in, it's probably, I'm trying to remember, it's like 2011, 12, but I was a big fan of Sky, watched quite a lot of it, and I just thought, you know what, there's lots of people like me out there, and it was actually at the time, I think I bought it for around $5.50, something like that, went nowhere for 5 years. Few dividends, but I just thought, actually, I don't really know why I'm buying it outside. I like the product, and I realised it just wasn't a very good investment. So I sold up and just focused on actually investing in some funds like Fundsmith. But then I really thought, okay, I've lurked enough on places like the Fool, Motley Fool since 2003. I've heard about other people's strategies, and now it's really time for me to take some ownership, because you know, I believe I should work out what's right for me rather than just going a bit blind. Yeah.
So when you first made that first investment in Sky, was there a strategy other than I like that company? And have you refined that strategy since?
Yeah. So at the beginning, no, it was more I like that company, and at a high level, it looks like it's doing well and it's got an okay balance sheet. But you know, I'm quite dyslexic, so the financials are really a struggle for me. I think one of the things which was very difficult was reading how, you know, on the Fool, people like Paul Scott versus David Stredder versus The End, all these different characters fundamentally had completely different investment strategies, but were all generally successful. And so I found it very difficult to work out what was right for me, where was my edge. And I think that then really developed sort of, you know, the 2010, 11, and then I started investing properly 2012. And I think what I realised is that there's certain types of businesses where I have a bit of an edge in understanding how they work from the area that I work in. So that was one area. I think the other areas I can be very disciplined. So I've got some fairly strict rules in how I operate to stop me being stupid and to take emotion out of things. And then I think the third thing is maybe the dyslexia helps with this as well, but I'm pretty good at spotting correlations and pinning together a complex story. And I think some of the points raised this week today have been about under-researched areas, and I think I can maybe understand things well enough to get a bit of an edge there. And so that's sort of really been the thing which has sort of changed, is learning that. And then the biggest transformation has been Stockopedia, because for someone like me who's pretty dyslexic, you know, numbers and the way they were presented, it really didn't work for me. But the clear way that they've been able to display things, the flags that I can use to sort of manage some of the, you know, bad investment behaviours I could have, that's really transformed, you know, my understanding of companies, but also, you know, what are the things I should be doing. So a big thanks to Ed and the team for creating that.
So that's helped with the filtering and then funneling down to essentially the more selective companies that you could look at, rather than researching all the others that are available in that sector or that sort of universe.
Exactly, but I think even when I'm trying to work out what I think the problem is, it also then allows me to validate what are the financials like and is that good. And I think, you know, beforehand I really didn't have that skill set. I still don't think I have that skill set, but I have the discipline to follow a lot of what it's saying. But I'm picking that up more and more, but, you know, I think that's a fairly long journey for me.
Okay, so how would you describe yourself in a sense of an investor? Are you low risk, high risk? And what sort of sectors do you predominantly go on?
So I would say outside looking in, I'm high risk, but actually I have some rules, which means I believe I'm low risk. So I sell very quickly if there's, you know, changes in CEOs, CFOs. I would sell very quickly if there's a profit warning. I keep a very disciplined stop. So as soon as something gets down to that level, then I won't accept a capital loss. So I believe, even though the investment areas I may have are perceived as high risk, I put things in place to try and manage that in a very, very disciplined way. In terms of the sectors I look at, I don't really think about sectors because, to be honest, I don't think that's how you understand what the underlying business is trying to do. So what I try and focus on is what I would call two-sided marketplaces, and that's a lot about e-commerce and internet.
Yeah.
And so I've got some, internal knowledge of how those operate with the business I'm in, and I'm able to assess how different companies are trying to solve different problems, and got some experience there. So I think that's a key area. And then I think I look at long-term themes, and I try and get an idea of who in that value chain is going to be able to capture value and maintain that value. So, we may have long-term themes like electric cars. There is not a question that is going to happen. It's a question of when and who captures the value within that for me to be able to invest in. And so looking at trends like that and then digging into, is it the primary value chain of the people creating the cars, or is it the secondary bit, the people creating the components, or is it the tertiary bit, people providing services around it? And, thinking along that value chain and then trying to identify the companies there, and that often spits up interesting things.
Okay. So with regards to all the universe of stocks, is there anything and sectors that you will not touch, that you're saying, you know what, that's not for me?
Yes, I'll not touch oil stocks. I'll not touch any of the sort of junior mining exploration. I won't touch any of the early biotechs. I won't touch any gambling or guns, more for ethical reasons rather than not understanding them. Yeah, there's a number I just won't look at. I don't think I've got any competency there, and I think in general they're quite high risk. So not for me.
So looking at your portfolios at 100%, where is the 5, 10, 15? Where is it broken down to? What's the breakdown of where they're held, what stocks, the sectors, etc.?
So I think roughly it's probably about 40% SIP, 30% ISA, 20% stock options in a couple of different companies, and then I've got some in corporate pension and trading accounts. So it's sort of spread across different areas. I also look after my wife's SIP and ISA as well. Okay. And then in terms of the areas, it's very much sort of micro and small cap focused. And I believe that's where, as a private investor, you have some sort of edge. So those have really been the indices and the areas. Yeah. And then within there, I think there's a number of plays which are back to that two-sided marketplace. So Boohoo and Gear for Music are the two main ones, and so held those for a sort of while, and they've done well, but I'm seeing them maybe accelerate the more product tech pieces, which I think is going to come through in the next flow for them. But those would be two of the marketplace ones. I also own Somero Enterprises, which is lower down the value chain of how do you win at internet e-commerce. And then Bioventix, which is the health testing company. Keyword Studios, which has done amazingly well, which has been a great one to share. And then there's also Visarium, which is around advanced materials, which again, it's not a if it's going to happen, it's a when. Yes. And they've been really the main company I've found in that advanced materials marketplace. So that's my largest holding at the moment. Okay. And then the other one, again, sort of in that area is IQE, because again, it's about advanced materials, changing the properties of silicon, and what does that then enable? So that's my other play within that space. Okay, so you've spoken quite a number of companies there. Your research criteria, when you're starting from the very beginning and you're going, right, okay, I like what that company's doing, I'm going to start my research now. Where do you start, and when do you go all the way through that to say, I'm going to purchase that stock now? What's the process for you, Mike? So I think it's very different depending on the sort of sector that they're in. So, for example, two-sided marketplaces, I'll look at what are they doing to solve problems which I know exist, and how are they looking to do that in a clever way? Are they using some of the things that I'm aware of to do that? And so, I look for, in the internet e-commerce world, are they using data loops, which in a very simple way means that you can then automate, or you can use AI to make things better and better and better as people use them. And so, I see a lot of data loops in Boohoo and Gear for Music, which means they start to have a very good way to improve and get better. And I try and understand that throughout the journey, from the demand part of their business through to the platform and ultimately into supply. So that would be an example where I'll be going through the user experience. I'll be coming in through different marketing channels, seeing how they're using my data, seeing how they're personalizing, seeing how they're changing the content. So my wife gets a little perturbed because it's almost like I'm an 18-year-old girl going shopping. But that sort of research I can pick up with my knowledge of what we do at Expedia. What are they doing as part of that?
Yes.
So there's that sort of real life living it and going through the experience. But then there's also the lens through Stockopedia, what's happening there from the sort of financial side. Yep. And I also believe there are other people out there who are better than me at researching. So it's also understanding, what's their perspective, what are the insights that they have. There's a lot of good people who are willing to share as well. So that's helpful. I think when it comes to companies like, Viserion, for example, I think the first thing is actually trying to work out what the hell is it they do in the first place. But then, I sort of get quite a lot of pleasure geeking out and trying to work out and, going in different directions. So I think I've gone through pretty much all the science papers on graphene through Research Gateway. I've been able to sort of pinpoint all sorts of different things which aren't, well, they're public, but people don't dig into it.
It's just too deep.
I've also phoned people up directly to try and understand a little bit about their perspective. What are they thinking about and how could that help? And then also, meeting with the management, going to the, AGM or investor, presentations that they provide. And so, I think once you discover different avenues and different insights, what I try and do is to have, here's what I think is happening over the next sort of, 12 months, 3 years. Here's what I believe are the capabilities they're building. And then, as news is announced or as I speak to people, validating that. And, if I'm not on the right track, then I'll go back to the core thing I researched to try and understand what did I get wrong. And then hopefully then, be able to backfill
yes.
and then have a better view going forward. So I try and use a sort of test and learn, repeat model to validate. Oh, that wasn't right. Let's pull back, validate. And, I guess it's a bit of an ever-going process.
Absolutely. So with regards to Viserion, I know that you've researched it absolutely thoroughly, yeah? And the stock went crazy from the lows of 10 pence all the way up towards £2, and it's now come down. So were you scaling into that company? And did you continue to do that? And then what have you done since regarding the dip and the flow of the stocks now? Because lots of news have come out, but the shares have drifted a little bit on, not necessarily lack of news flow, but people not really buying into the long-term potential of the company. What have you done there?
So I think at the beginning I was lucky to build a fairly sizable position early, which meant that a lot of the growth meant, that was then a much bigger holding. And I think my later top-ups have been smaller, but it's just been as I've uncovered more things, they've been validated. And, I believe for me, advanced materials is going to happen in a big way. I think they are well positioned. And so as I uncover more and as, frankly, the business gives me feedback that they're doing the right thing and they're heading in that right direction, the share price doesn't bother me so much. I've been topping a fair bit up at these lower levels as well, but I think it's more as I get more comfortable and I can validate what I believe back to that thesis. It sort of takes away the sort of the stock price piece. Now, I think I've also got to be careful because I'm possibly getting a little bit greedy. It's reassuring to hear people like John Lee have some rather large positions in his portfolio, but he possibly waited a few more years to build it that way. So I think early in my stage of investing, position size hasn't been something which scared me. I've had everything in the startups I've set up or worked in. So I guess that doesn't feel quite so strange to me. But I would say really for me, it's focusing on the business and not on the noise. And I think things are executing pretty well there. But I also believe it will take longer than a lot of other people think. But that's not my problem, that's their problem.
Yeah, I was going to talk about the noise, and because we're both on social media and we're on Twitter and various other forums. How have you dealt with the noise in the sense of that particular stock? Because I know that you've been, not necessarily vocal, but you've done your research, so you know exactly what's going on. Whereas some others that are making quite a lot of noise simply have not.
Yeah. Well, I guess at the beginning, I've had a lot of other people sharing insights, which I've gratefully sucked up for almost 15 years now. And I just thought with that one, I have done quite a lot of research, and I think I've got a fairly good idea of what's going on. So I did create some posts on Stockopedia, which hopefully it's allowed others to maybe understand things a bit better. So that was my sort of first stage of mindfulness. But I think the sort of second part is, I'm sort of willing to share what I think is public, but I'm also appreciative that you can uncover things which are maybe not wanting to be uncovered by the company, so I do keep quite a lot back. But there's also some people I really respect their views and perceptions, and so I may share things with them and see what they think and get their feedback. And then, you know, if there's people on a public forum who ask me a question, generally I'll answer if I think it's suitable. But yeah, I mean, I think sharing has been one of the huge changes, whether it's through traditional forums or through social media. People can find like-minded people or people who've got similar interests. And, you know, I think for the private investor, that's a huge advantage. We had a previous presentation, someone talking about his team of 50 people helping with research. You know, there's some pretty big teams on social media with some people with a lot of experience in particular areas who can all chip in, and, you know, it's sort of helping us get back up there.
Absolutely. No, I think it's phenomenal what we've got going on, especially on Twitter at the moment. It's got a great cohort of people. So I'm going to ask you another question now. What has been the greatest lesson that you've attained since you started investing?
So I think I've been very lucky in terms of I've got a sort of focused approach on what's my win rate, what's my loss rate, in terms of picking shares, and then how much do I win by. And so I sort of have this as a core thing to understand, is my strategy working? I was very lucky that, you know, the stocks I've held have basically all gone up, and that's maybe just due to the market, rather than me being very good at picking. But there was one Crawshaw where, again, I got in at a sort of, you know, what I would call a sort of mid to late part of the bull run on there, where I sort of thought I understood what they were trying to do. And, you know, I'm fortunate some of my wife's family live up north, and, you know, had a few good hot roast chicken sandwiches, and I thought, this is great, you know, taking on Greg's. But I guess really I didn't really understand, you know, what was the problem they were solving in the marketplace and how sustainable was it. And ultimately I ended up losing, I think, 47% of the, you know, the paper gain, you know, and the amount that I had invested there. And I think that really made me realise I really don't like to receive a capital loss on something that I've invested in. I prefer to make a quick decision and then refresh the mind around what happened, analyse it, and then reinvest again. So that was my biggest loss, and it's really led me to manage a clear sort of stop loss policy going forward. So I believe I've learned from it, and at the same time, it's something which was painful, but not too painful.
You've got to move on. You can't leave it as an anchor. Otherwise, it'll affect your other investments and your psychology going forward.
But, you know, the biggest learning for me is you have to learn when something goes up, why, and was it down to you, or was it other factors? And if something goes down, you know, again, why, so that you can learn from it. So I think that for me is the most important thing, is testing your process, and is your process right, which is fundamentally your strategy, and it's good to sometimes get reminded. Yeah.
So with that and your process, do you keep a diary or a log of why you purchased and then why you've sold and what's gone on throughout the week or the month or the year regarding your investments?
Yeah, so I do write a sort of thesis statement, try and do it as a one-pager. I think it's good discipline because it makes you really think. And at the same time, it also means when I, you know, look at the process of what's happening and how do I respond, I can look at that very quickly, you know, build that conviction of what do I need to do following, you know, if the CEO or CFO has left suddenly or there's been a surprise profit warning, you know, you can just validate and say, right, that's what I should be doing. Yeah. And I think the way I try and act is going back to that little win rate, you know, triangle is my process working, or is something going out of kilter? And I try and analyse the process rather than the share, if you see what I mean.
Yeah, no, that makes sense.
And if I look at the successful outcome, it's the success of following the process rather than that went up a lot, that went down a lot. It's trying to look less at the outcome, more at the process.
Yeah. To be consistent with your methodology, essentially.
Yeah, and ultimately, if things start, you know, going out of kilter, then, you know, go back to working out why and, you know, reassessing. So, yeah, it's always a constant learning process.
Absolutely.
But, you know, I think it's interesting. There's obviously a change in how the markets are operating, and, you know, what's happening out there, which has been, you know, referred to today. But be interesting to see how I need to adapt over the next sort of few years.
Cool. Okay then. Given the many lessons that you've learned since you started investing, which one would you most like to share with us?
I think probably the biggest one is just minimising your losses. I think that's probably the biggest area of performance gains I've had. Yeah, that for me is the biggest one. I think it's very difficult to do. I think there's a whole emotional side which is very difficult to sort of try and control and rationalise. But I believe, for me, The Art of Execution was a book which really simplified decision making. And, I'm not the sort of person to double down on something which has been going down. I know that's not part of my character as a sort of, pure hardcore value investor. So for me, reading that book and then starting to apply it, that's probably the thing which has really helped my success. It's allowed me to run winners and enjoy that luxury.
Yes.
So I think that's the biggest.
You've almost answered my question that was coming up about books. You've mentioned The Art of Execution. Is there another book that you'd recommend for people that are listening that you found very informative and helped with your skill set?
Yeah, so I'd say that's what I would call a secondary or tertiary book, because I think you have to go through the sort of nuts and bolts beforehand. But the Naked Trader book's very helpful, because I think it starts at the real basic nuts and bolts. So literally, what is this? What is that? Where do you find it? I think that's very helpful. I think it's one you can reread again to remind yourself of the different bits which you're possibly forgetting as you progress. Art of Execution was more about here's a clear strategy which has some data behind it. Which goes back into the way that I like to work, using data to make decisions rather than just gut feel. So that's been very helpful. I then actually think, while Stockopedia is a platform of information, there are some very, very useful learnings and documents they have around, how to treat profit warnings, or, sort of how to think about things in the different situations. So I've actually found those very helpful, because it's very much, again, how you manage this situation.
Yes.
And then there are always wider investment books, but I think one of the things I've struggled with is I read them and I almost question too much what I'm doing. And it's back to that, there are lots of people investing, lots of them have different strategies, lots of them can be successful with what's right for you. And I think it's only recently I've really been able to read them and apply what's right for me. Yeah. So I do think that you're almost better keeping it simple to begin with, getting that clarity, and then opening the kimono.
That's a good idea. We've got a very good specialist writer in our audience today, Gervais Williams, so we'll have a chat with him in a minute. So I've got one final question for you. Yeah, given what we've got going on in the markets today, and have been going on for a little while, and I'm using the B word now, Brexit, is there any sort of macro or overlying sort of issue that is giving you concern regarding your strategy and investing, with the view that, from my assessment here, you're a long-term investor. When you've chosen your stocks, you like to be in them for a little while and ride them out in investments. So is there anything there that you're thinking, I'm quite concerned about that, and how's it going to impact on me?
I believe what I'm investing in is the big themes. So, I'm investing in people around, for example, the electric car industry. IQE is providing the lasers through LiDAR to help them become autonomous vehicles. Do I believe that will stop? No. Doesn't matter what happens, that's carrying on. The question is it the pace, and, those sorts of areas. And so I think if you follow the really big themes where it's sort of guaranteed that something will happen, then I think you can de-risk, and as you maybe find other companies which are performing well in those areas, spread the risk around those key themes. And so I try and sort of simplify the macro by looking at what I would almost term the upside macro. So that you can sort of ignore the noise and focus on this thing which is definitely going to happen.
Long term,
and then de-risk within that thing which is going to happen as you understand more and you uncover more within there, and as different things progress at different speeds. Okay.
Final question, to somebody out there right now who's contemplating become a private investor and has got a little nest egg and thinking, I'm going to make my first plunge. Given your journey thus far, what advice would you give to them, as in, before you do that and make the plunge, do this? What would you say to them?
So I would almost go back to the emotional intelligence and trying to understand, who are you, what do you like, what can you cope with, what situations don't you like to be in? Because I think, if you're someone who, quite likes to be contrarian, you don't support Man United or Man City, but you're quite happy supporting Hartlepool United, you're a bit of a contrarian maybe, and, try and just understand who you are and what makes you comfortable. And then I think the second thing is just, start slowly, learn the sort of the nuts and bolts of just how it works, because for me, there's a whole load of confusion because there's acronyms everywhere, which for me is a nightmare because I confuse all the letters up, but I sort of know what I'm meaning, but somebody else doesn't. Get that basic founding, and I think you then have the confidence to start to reach out and bring in knowledge, and once you work out who you are, you can then build around that. I think it's very dangerous to follow other people and not realise why, or what they're doing and not realising why, and so I think that foundation is the thing which then will give you the confidence to back your own decisions, to start to take the plunge and spend the money. And you're more likely to have a sort of more positive outcome, in my mind, that way. Whereas you could have a short-term success following someone in a hot stock your friend suggests, but, where's the next one coming from?
No, I love that answer. Thank you ever so much. Thank
Pleasure.
you, Mike.
Lovely to meet you.
Lovely. Brilliant. We're going to have... thank you. Thank you, guys. We're going to quickly have a little bit of Q&A, a couple of questions. I see Gervais in the corner of my eye is waiting to pounce with a question, but anybody else wants to have a question before Gervais is very welcome. It's Gervais then. Go on then. 1 second.
You talked about the bigger picture and picking the themes and all the rest of it. To what degree do you kind of look at sort of economic factors, those kind of things, you know, consumer trends? Is that a significant feature, or is it really more that you just follow the big features and they largely drive you right through all of that kind of stuff?
Good question. I think I do look at the bigger themes, but also, you know, within my own area of expertise within my business, I see the particular trends of behaviour. I get exposed to that in a very fortunate way globally. So I'm not just looking at what's happening to e-commerce or internet businesses within the UK. I'm understanding what are the I guess legacy technology leaps happening in Asia, because we're quickly seeing that that's the level that you need. And so I think for those sorts of marketplaces, which I understand because of where I operate, I'm probably taking a much more global view. I'm looking for the next leap. So, for example, I know how important voice is now in Asia. It is literally 80% of all our searches, and for the majority of our searches. When I compare that to where we are in places like the UK, it's maybe 15-20%. Now, even that's quite high for a UK business, but I know what the problems are over there, and I know what we have to do to be successful. When I see others applying voice, I feel like there's maybe a bit of knowledge there which helps. I think when it comes to areas where I don't have sector expertise, I think I am more general, looking at the long-term trend and trying to work out, the primary, the secondary, the tertiary people who are going to be successful is where I may take more of that view of where do I think the opportunity lies. But I'm by no means an economist or someone who's good at that. I do read The Economist, but I think I have less edge there.
Anybody else got a question? Bijan, did you have a question?
In terms of adding to your sort of education, adding to your sort of investment knowledge, and in terms of difference of investment practices and policies, how do you go about adding incremental knowledge to what you already have, in terms of deciding what to read, when to read?
Yeah, I mean, so for example, a huge gap for me is just understanding charting and charts. And there's some people I follow on Twitter who may be a bit wheelie, who have all sorts of different comments on that, and I really don't understand any of it. So at the moment, I've got a very, very low level, trying to simplify it so I can understand it, that I can see what's happening. So I literally just look at RSI and Heikin Ashi candles. I almost can't cope with anything else. And so I want to get confident just looking at those things and understanding it, and then incrementally building. So that would just be an example of where I know it's a big area that I've got to get better at, but not trying to get overwhelmed and trying to overcomplicate things. Another one is I hear a lot of people using leverage and shorting. I sort of don't really have any interest in the leveraging bit, but I do like the idea of being able to risk manage. And I think I try and do that by non-correlated shares, which is why I was quite interested when you talked about that. But equally, at the moment, I don't really understand how you would manage risk in the portfolio, shorting, hedging. So that would be another area which is literally zero today, which I may look to investigate in the future. But I do believe in keeping it simple and trying to validate your process is actually the biggest learning, to understand, is it working? If it's not, why? Did I follow it? If not, why? And building, once you know that's the working bit. Thank you.
I think we're done. Thank you ever so much, mate. Much appreciated. Thank you.